This content is intended to be used and must be used for informational purposes only. It's very important to do your own analysis before making any investment based on your own personal circumstances. The Better Traders is not a broker dealer. We are not an investment advisor. We have no access to non-public information about publicly traded companies or cryptocurrencies. And this is not a place for the giving or receiving of financial advice, advice concerning investment decisions, or tax or legal advice. The value of investments and the income derived from them can go down as well as up. Investors may not get back the amount they invested, and past performance is not a guide to future performance. Hey guys, it's me, Minute Papa, and you're watching my weekly live stream here on YouTube. It's good to see everybody. There's a little bit of a lag in the video like always, so I'm going to talk and I assume that you can hear me. But again, I want to make sure because I'm pretty sure that lip reading is an art that's very difficult. Yeah, we're good. So it's good to see everybody. Thank you for joining me today. We're going to be focusing specifically on Ethereum since the merge is scheduled for basically 3.5 hours from now to go live. So that's the main focus of today. But I want to look at traditional markets. I want to look at the Dixie, the dollar, US dollar index, and also talk about the CPI numbers, the consumer price index numbers that just got released this week, and the fact that US inflation has grown instead of shrunk. It grew from 8.1% now to 8.3%. It's changed my stance a lot, and we're going to talk about that. Okay, so before I go further, and I forget, I just want to remind people that, here's the right button, sorry. On YouTube, if you're just hanging out, you're just seeing this tweet or whatever, and you popped on to watch, welcome. I have these live streams every single week at this time on my Thursday at 11 a.m., and you can notify yourself, and this will be adjusted automatically for your time zone. So this would be 10 p.m. East Coast time in North America, and it'd be 7 p.m. West Coast time. So there's a lot to talk about. I have a lot of videos, and I'm posting videos pretty much 5 days a week, and including the live stream that I do every Thursday for me. So there's a lot of stuff that's happening, a lot of new things happening also for 3 Commas, a video coming out for me tomorrow night. It'll be Friday night, but it'll be North America Friday morning about something else that's been released on 3 Commas. It's pretty exciting. But 3 Commas aside, we really need to talk about the markets because things have changed a lot. So according to, and this is the first thing that popped up, there's no reason why I'm showing CoinMarketCap. To be honest, I don't like CoinMarketCap as much as I like CoinGecko personally, just because CoinMarketCap was acquired by a big cryptocurrency exchange, and I feel like it might be biased. So according to this, the merge is scheduled approximately in 3 hours and 3.5 hours or so. Note that it's not based on a certain time, but it's at a terminal total difficulty of this much. So this time could change. So don't go at this thinking that, oh, it's going to happen this exact time. It's going to happen. It's mostly about when the block is, or rather terminal total difficulty. They do that on purpose. Why do they do that stuff of this insane number? Okay. So looking at the charts, and let me pop myself back up here. Pop. All right. The chart for Ethereum has a lot of things happening on it, and there are a lot of other things that are happening too. The big misconception that I'm seeing right now is the general understanding of the merge. When the merge was starting to become popular after we bottomed in June, Ethereum rallied a lot. It rallied almost 100%. And this is with the expectation of the merge being this really big event. Now, it didn't do what everyone was expecting it to do, to go up only, which no chart ever goes in one direction forever. We've talked about that so many times. And it confirmed this overhead trend right up here from this date in April to right there. And that trend was confirmed here. So what I think is really misleading about this is that what we saw in previous markets where Ethereum made a change in the protocol, and when Ethereum made that change in the protocol, there was a split, a fork, and Ethereum Classic was born. Now Ethereum Classic is independent of Ethereum. There's some people that like it better. is just a fork. Bitcoin Cash is a fork. So is Bitcoin Gold, Bitcoin Diamond, and then Bitcoin Satoshi's Vision. There are lots of forks. Usually when these forks happen, you automatically get the token if you're holding the original token. So if you've ever traded stocks and there's a stock split that happens, for instance, Google has split several times. So if you originally had Google and they did a stock split, there'd be A class shares and B class shares, and then you would get both. And it would change the value of the Google A shares and it would devalue it, but you would get that equivalent in B shares and both would go up, essentially. So when there's a fork event that happens, it's not necessarily like that. The value of Bitcoin or Ethereum, whatever's being forked, or like this split, it doesn't get reduced like it does in the stock market. It continues to stay independent. But what typically happens is that whatever is forked from the original doesn't survive. I should say thrive instead of survive, because there's still Bitcoin Diamond, Bitcoin Gold, Bitcoin Cash, Bitcoin Satoshi's Vision. There are lots of people that like Bitcoin Cash for the reasons. There are lots of people that like Ethereum Classic. So the misconception I'm seeing in some places that the merge is going to create a new token. It's not. Ethereum 2.0 is just Ethereum. The biggest misconception I'm seeing that makes me believe that we're going to see a sell-off is that people are thinking, well, I want to hold Ethereum because when the merge happens, it's going to blow up. It's going to be amazing. The unfortunate truth is that this is most likely going to be a sell the news event, in my opinion. There's no real catalyst for Ethereum to shoot up to $4,000 or even back up to $2,000, in my opinion. This is based on the charts. This is also based on the technology. The merge, which I've talked about before, it's only speeding up the protocol. And if anything, the merge is changing the proof of work to proof of stake status. So it's going to be more energy efficient. It's going to do all these things. It might speed it up a little bit, maybe, but it's not really going to reduce the gas cost. It's not going to do a lot of the things that they're hoping to do and implement in the future. The merge is just the first thing that they have to do in order to make Ethereum better for the future. So again, there's a lot of people that don't get it. Therefore, I think a lot of people will be disappointed that the price won't go up after the merge countdown reaches 0. To be honest, I think a lot of people are going to be frustrated, and if anything, they're going to sell because they're thinking that, oh, well, this is no good. There's really nothing's really going to change. I mean, as far as we know, being laymen and women, whatever, looking at it, going, well, it's not really faster from using a protocol, or sorry, not a protocol, like a Chrome plugin like MetaMask. It's not really going to change too much. It's just taking the power away from the miners and putting it into the hands of stakers. That's it. So with that in mind, because I think there's going to be a lot of confusion around this, I don't think that there's going to be this explosive move that everybody's hoping for. So that's the fundamental side of this. Now let's talk about technical analysis and reasons why I don't think it's going to be amazing. So we're going to look purely at our support and resistance first. So when we're looking at our resistance lines, and let's go back to the daily because it's easier to see. Oh, and right, there we go. When we're looking at the daily time frame, and I'm looking at Kraken, by the way, because this one is the longest historical chart that we have available to us here on TradingView, and that's what we want to look at every single time. It doesn't have the most volume at all. So we can see that I have this resistance fan here. So there's our big line that's going to take a long time for us to break above, then the next line, then the third line, and it did cross above the fourth line. I was starting to feel bullish here, seeing it bounce off of this. Essentially, it broke above the trend line, it bounced. But given what's happening soon, I'm not feeling personally excited. I actually sold most of my Ethereum up here because I was expecting things to not go so well personally. So, and I was also trading it for Bitcoin, but then Bitcoin fell, so it wasn't it wasn't good for now. You know, it would have been better to sell for cash. But anyway, that's besides the point. So to me, looking at the chart, there's a whole lot of resistance on the upside, and we're not even taking into account
horizontal price points for resistance. We're not even looking back at the chart to find, oh, wow, well, this price at 1700, there's a lot of support and the price is broken below it and it's really struggling to get above. Therefore, it's going to be difficult to break and hold above. So when we start finding multiple resistances that are kind of lining up, that proves to be pretty strong. This actually happened with the Dow and the S&P. And I'm getting ahead of myself, but I want to explain the point well. So if I look at the chart for SPX, actually, yeah. So the price was recovering. It was looking great, but the price, or I'm sorry, the index, the S&P index hit our 618 line perfectly. The high is at 43.25. The 618 is at 43.26, literally one off. And it had this mega resistance point up here. So we had two things going against the odds for S&P to continue moving up higher. Therefore, there's a higher probability of it falling down. You get where I'm going with this? So in the same line of thinking, if we know that there is a strong psychological support / resistance now at 1700 that we can see even in play here, it's going to be hard to break above that. And we have this resistance. This is just two things that's making me feel like, I don't know. Let me go back to this and add in some more stuff. So on the support side, we have a line of support here. This is the best, most confident line of support we have, but it's not that far from where we are. That's like a 10% drop, and it brings us down here to 14. And note the angle is pretty high. Anytime the angle is really steep, like pointing up, that's a really weak trend line. Anytime that we see a trend line that's more horizontal, it's really strong. It's going to take more time and more effort to break above that. So when we zoom out though, there's actually a really long support line over here. Let me actually do the weekly time frame because it's easier to see. So this wick to this wick. So in reality, if the price were to drop and things were going catastrophic, the first line of support is really here at 800. Like things were to drop today, it would be 760, which lines up really well with this. I mean, this is cracking though, there isn't as much volume, so that's a big drop. That's a 50% drop. Again, I'm not saying that I expect Ethereum to drop 50%. I'm saying that if it dropped this week, right now, the next line of support is here at 750 or so. Notice how my tone has changed a lot since last week. I'll go into that in a second. So let's look at some more things. Let me get rid of these. And I want to go to our fibs. I don't want all of them though. I want to look at the most recent fib right here. So this is drawn from November down here to June. So given this, it's interesting to me that our line that's previously here before at 1700 lines up beautifully with the 382 support / resistance, which is the Fibonacci line. I think it's really interesting. Plus price got stopped out near 0.5. And when we take into account, not the support fan, but the resistance fan, there was actually, let me do this. There we go. There wasn't just two things here. So we saw here, I'm sorry, let me back that up. Like I said before, about two different things lining up. There are actually now three. There's the fib line, the 382 fib line, that's resistance. There's our price resistance, that's just 1700. And there's this trend line, that's 3 points. Back here, there were 2 points. There was this trend line that hadn't been created yet, but there was 0.5 here. And RSI was crazy oversold on the daily. Something to look out for. Again, it was also oversold back here. So, sorry, I said oversold, didn't I? I meant overbought. It was above our red zone. So it was overbought. It was near our trend line. And it was dancing on this fib line and the price point. That's a recipe for, not a disaster, but the odds are definitely against it. So the bearish argument that I have for Ethereum is that the merge is not going to do anything special to the price. If anything, the price will fall. And I'm expecting these support lines to be touched next. So going back, it would make sense for this immediate support to be broken if things are really going to crack down today. And then we'll see price fall back down here, which would line up perfectly, literally perfectly today with this support at 1427. So am I placing a trade personally right now? No way. No way. I would not trade the Ethereum chart whatsoever, just because there's too much uncertainty for me with this merge that's happening. While there are more arguments, in my opinion, for a bearish outcome, I'm still not going to be trading it. And if I do take a position, it's going to be a small one. And it'll definitely be a short. It won't be a long. So something else to point out, and now we're going to switch to different charts. So you're going to have to remember what we're seeing here. We have the fib line working against us. There's 1700 price point working against us. There is the overhead trend line working against us. Now let's talk about something that's really important that I talk about a lot, which is volume and the relationship between price and volume. Has volume been steadily increasing? What do you think? Has volume been steadily increasing? No, volume has been dying down. This tells me that there is not as much demand for Ethereum. If we compare this though to Bitcoin, and remember this trading pair has the most trading volume for USDT, volume has been on fire, literally on fire. The 30-day moving average here on the TBT base to quote conversion indicator is on par with the volume we saw back here in the dump back in May 2021. Check out this volume that we're seeing here, and the price isn't reacting. So volume doesn't necessarily mean all buying, all selling. That's why I have it gray. It's just trading volume. So again, I want you to look at this and think about the trading volume. Now let's be more, let's be fair. So I'm going to go over to CoinGecko, and we're going to go over here to Ethereum. And I want to identify in the markets which trading pair on which market has the most trading volume. So right now we're looking at, 24-hour volume. There we go. So actually FBUSDT is a better chart to look at because it had $2 billion in trading volume. And the USDT chart is only 1.3. So let's go over to FBUSD. On Binance, let's go over to TradingView. Now we have a different story. See? So what I was looking at before was telling me that this is bearish. Volume's not growing. Volume isn't looking good. Now there's a reason why there's more volume here. Binance actually announced a week or two ago that they're changing how their stablecoin markets are going to be, where they're removing USDC, TUSD, and another stable coin, and those are going to be automatically converted into the value of BUSD. So there's more trading volume for BUSD, which is Binance's stable coin. So that's why there's been way more trading volume here. So BUSD trading volume is growing. So I'm glad I looked at that because this is interesting as well. So there is demand as far as the biggest 24-hour trading volume goes for the exchange that has the most volume. I don't know. I'm still not completely sold on it yet. So we'll have to watch and see though. I hate that answer, but for me, there are more arguments for a bearish outcome than there are for a bullish outcome. Okay, now let's move on to Bitcoin because that took 18 minutes. And I try to keep this at 30 minutes. And if you want more, by the way, of me doing analysis and talking about all that stuff, you got to join the Better Traders Club. It's through the link down below, maybe, or at least on the bettertraders.com. I don't know if I actually have a proper link for it. I think I should. But the club is a monthly subscription-based membership where you get access to a private Discord server. You get access to tools like the DCA backtester, the TBT stop loss hunting alert, which, by the way, was spot on. And I don't want to give it away, but I don't think I have a choice. But I want to show you this. This little indicator right here, this simple little stop loss hunting alert, lets us know that there could be some unexpected stop loss hunting, which is volatility in the market, whether Bitcoin's going to go up or down. The whole purpose of this is to let us know if we're in profit, protect your profit. And if you're thinking about trading leverage, you might want to think twice because there could be a volatile move to come. Note, nothing happened here. That's okay. It was just this little move up and then it fell down. But check it out. The price fell. We got a stop loss hunting alert. And I actually said in the private server announcements channel, I have to find it because I'm posting literally so much content. Come on, come on, come on, come on. I'm gonna find it. I'm gonna find it. It's gonna do it. Good grief, there's so many. I want to show this, but I can't because it's not fair. Here we go. Almost there, almost there, almost there, almost there. It's not exactly it. Let's see, 99. Yes, okay. So I was saying in the announcements channel, no, actually, I was in the chat. I'm not going to find it. It's taking up too much time. What I said in the channel was essentially along the lines of, because we've already dropped, it makes more sense for this stop loss hunting alert for Bitcoin's price to go up, and it did. And then we got another alert telling us on September 11th at 7 p.m. you might want to watch out. There could be some volatility to come. So the price of Bitcoin did move up a little bit higher, 5%, but it also dumped. So this is the exact thing that it's doing. And again, you get access to that only through the club. So you get the DCA backtester, you get the TBT stop loss hunting alert, and the TBT forecaster. You get a ton of stuff. And you get weekly live streams with me with curated bots and all that kind of stuff. Like, there's a ton of content. So going to this chart, looking at this, we had back-to-back stop loss hunting alerts here. So that makes me a little concerned, because if I zoom out on the chart, these don't happen that often. Let me go to the 4-hour time frame, or no, what is it? The 6-hour. No, it's not going to show up, is it? Nuts. Okay. They don't happen that often, but when they do, we need to pay attention, especially when they're back to back. This one was back to back here in June. The price fell. These were going crazy right here. So when these happen, I pay attention. So again, that's why I'm not feeling super confident. So this is something that I'm not seeing directly on the chart for Ethereum, but because this has been ringing, I'm feeling a little bit more cautious. So in regards to Bitcoin and Bitcoin's price action, while there are strong signs of accumulation, it's obvious that we're accumulating in this zone and we're still going sideways. I'm feeling less and less certain that we're going to hold this line of 20K, mainly because of the CPI update that inflation in America has grown to 8.3%, which means that in order for the Fed to curb inflation, they're going to have to raise interest rates, which will make the outlook more hawkish, more bearish, which means that we could see S&P and the Dow fall. Now, we saw that reflected in the DXY and the Dixie. You can see it here. This is when I was so excited because we had a bearish engulfing candle, which is fantastic. The price fell down to the 272, and then inflation numbers came out and the Dixie shot up 1.5% in a day on September 13th. Guess what happened for Bitcoin on that day? It fell 9%, almost 10%. Now, there are a couple of things that are good. One thing is that, in a way, we have this downtrend that's been established. We're getting lower highs, which is good. But this could also be a bull flag in disguise. So the dollar index could fall, but I'm going to be watching this thing a lot. I'm not super excited about it right now, not like it was before. What I was watching before is simply this, where I was hoping that this previous week would be a bearish engulfing candle like this one, which forced the next several weeks to be lower, like this one, which forced the next several weeks to be lower. But honestly, looking at this chart, I mean, knowing the TBO so well, having used it for such a long time, any chart that you look at with the TBO and the slow lines pointing up, the mid-slow, mid-fast, and the fast is all pointing up, and the price is above the TBO, it's really hard to argue against a trend like this. This is a mega trend that we've seen in Bitcoin too. I mean, you can get as upset as you want to about that, but the point of the TBO is to tell us and identify situations like this. Look, Bitcoin back here in January 2021, the fast line's moving up, slow line, mid slow, mid fast, fast, and the price is well above. That means you don't want to touch this trend. Don't short it. Stay with the trend. The trend is your friend until the end. And eventually that end came. Now note what happened. The price topped out, and then the fast line started to curve down just a little bit. Now we're not seeing that happen yet with the Dixie. I really want to make this really clear that I don't see any trend reversal coming anytime soon in regards to the TBO. However, we can't use just one point to make an argument. That's a really weak argument. So we got to look at multiple things. So another argument that we could see the Dixie weakening could. RSI has been consistently printing lower highs, lower highs, lower highs. We're still in this overbought zone of 70 and higher. We're at 71.24 right now. We can see RSI print lower highs while the price moves up. Again, to use Bitcoin as an example, this is the exact same thing we saw back here. Here's our high on RSI. It was all the way up at 98.17. And then note we have consistently lower highs for RSI, and the price went up higher. It went up a lot higher. So just because RSI is cooling off doesn't mean that the price, or the index in this case, is going to follow right away. We have to be realistic. So one good thing for us in hopes that the Dixie will fall is that we have this trend line on the daily time frame that's in play so far. Not that strong, but it's in play. The RSI is weakening. That's true. In regards to any fib lines, we're well above our 272, which isn't good because that means the next stop of termination would be 114. That would be an increase on the Dixie of 4%. We saw a 10% drop in Bitcoin when the Dixie moved up 1%. So you can imagine that's no good. It's no bueno. If we look at the 2002 chart, the fib lines, then we have our top up here at 120 for the Dixie. This would destroy markets, absolutely demolish them. If the dollar really strengthened up another 10%, you can do the math, just multiply. If we're looking at the 1985 fib lines, and I'm going to switch to the monthly time frame because it's a little bit better to see this. This is when we had this massive move up. So we have a little glimmer of hope. Our 618 and our 0.5 fib line from 85 and our 1.618 from 17 are aligning. That's good, but that means that the Dixie could still move up another 3.5%. So if the Dixie moves up another 3.5%, it's not going to be pretty. So let's talk about traditional markets. If that happens, again, what happened this week when the Dixie moved up 1%? Let me just bring it back again. So it moved up 1.5%. What happened to the S&P? It fell 4.3%. So let's just do a little bit of rounding, and we'll say that the Dixie moved up 2%, we'll say. So that means 2% up, 4% down. So we're multiplying by 2, roughly. That's a really bad rough, but you get it, rough. So if we're going to see the Dixie move up higher, so Dixie's going to move up another 4%. That means the S&P should fall another 8%, which would take it right down here to 3640, which is our support line, which is actually good. Because if we claim support on the weekly time frame down here, don't worry about this. This is just a drawing. That would actually be an established double bottom. And that would be the end. That would be a great double bottom to make. So I'm actually okay with that scenario. But the reality is that an 8% drop, we want to multiply that drop when we're looking at crypto. So an 8% drop in crypto would be at least a 16% drop for Bitcoin, if not more. And Ethereum and everything else, multiply it by 3. So a move down of 8% on the S&P or the Dow could spell for Bitcoin a 16% drop. and that would put us down to roughly 17K. Let me go to the daily time frame because it's a little bit easier to see. Fix that, and let me get rid of all my lines. Sorry, just give me a second. So we have a naked chart, and we can see where that might plot us and put us. So a 16% drop would put us right about there at 16.7, below our previous low. So what do you think will happen if we hit that? Probably fall a little bit further because people are panicking. There are probably lots of buy orders right here, but if we really fall down that far and we have this expectation to do double, so 16 or maybe even 17%, it could be lower. If that really does happen, then we have to start looking at stuff that I didn't really want to look at for a long time for lots of good reasons. So note where that line of support is. It's below a lot of stuff, which isn't good. If we look at our 2018 fibs, and our extensions and our 2022 line, so it's basically in no man's land. So it means that we would probably see a fall down here to 15K, unfortunately, if the DXY goes up higher, which would cause the S&P to fall, traditional markets, which would cause Bitcoin to overreact. So keep in mind that all this stuff is totally not connected to whatever is happening to Ethereum right now. It's its own thing. Now, this is something that's taken me, honestly, a long time to figure out. The relationship between traditional markets and even the relationship that we're seeing now didn't exist previously. So this kind of stuff is surprising to me, and it changes a lot of my theories about going sideways until the end of this month and next month. But if the Dixie finds out that, that it is confirmed resistance and it's not going to go up higher and it's going to fall back down and it's never going to go up again, one thing that would change my mind, and here's the golden nugget of happiness for all of you out there that are like, oh boy, this isn't good, because Moon and Pop is usually pretty bullish and happy. So here's our line of support. One thing that would make this different for me is seeing the price get rejected, bounce, get rejected, bounce, get rejected, bounce, get rejected, bounce, because the more bounces that it has right here, right here, right here, right here, the weaker this becomes until finally it'll crack below. This is a really common setup to see at the top. We actually saw this on Bitcoin. If we go back a bit, I need to go to the daily time frame. It'll be a lot easier. And let me just clear all of my drawings. Let me do this because it's going to draw. Okay. So having this kind of pattern set up. So we have these repeatedly lower highs, lower highs, lower highs, and it cracks lower. So in a way, it's not perfect, but we can see that we have this trend. Let me actually move this out of the way. This one right here. So we get a bounce and it's weakening, a bounce, and it cracks below. So when we see this pattern form, it's bearish. So there's a possibility that we could see the Dixie go bearish. Could. Possibility. But this would be the ideal dream scenario. It would be so good to see it get rejected on this simple trend line that we see up here. Like if we saw this happen and it gets rejected and it bounces on support, every bounce is going to weaken it. And then that would mean Dixie would fall a lot. If Dixie falls below 107, down to 105, it's going to help the euro come up in value, the yen come up in value, and the S&P come up, and Bitcoin will follow as well. So again, there's a lot riding on the Dixie right now. And with the Fed being so hawkish, CPI numbers coming in hot at 8.3 inflation, that's why I'm leaning more bearish. So that's my dealio. So let me come over here to the comments, take a sip of coffee that's very much cold. Actually doesn't bother me that much. I don't mind cold coffee. All right, so looking through some comments. Hey MP, is there a DCA tool that helps you better understand how much money will impact a trade? Yes, there is. If you go to TradingView and you go to indicators, I already have it favorited, but it's this DCA calculator. So if you go here to community scripts, DCA calculator is this one right here. So this one's going to show you where well, if you started a bot at 22 and your take profits at 2%, your base order size is 100. This one is 200. Your safety is at 5% or whatever, and you have 2 safety trades. Great. So this is showing you where you would take profit. Okay, that's essentially what it is. So you enter at here, 22, price falls down, and now it's showing you where the averaged price will be after your safety trade. And then you can add more manuals. So if you want to average down at 17.5 and you want to add more, actually it should be 8 because we're doubling down, then it shows you where you would average your exit based on the extra additional safety trade. So yeah, it's that DCA calculator by Queen's Lambone. Okay. Crip Crazy spit it out. Jace Lesser, hey. Millennial Wealth. As a Solidity developer, I find Solidity one of the easier programming languages to write code on Ethereum. That's great. I think people will be disappointed, says Brad, when they realize the ETH merge doesn't reduce gas fees. Yes. Again, I feel like there are a lot of misconceptions out there about what this merge is really doing. And again, simply put, the ETH merge creates the framework for better improvements to be implemented onto Ethereum more easily. And it also reduces their carbon footprint because proof of stake is much more efficient than mining rigs. So yeah, I agree with you there. So that's why I'm also thinking that it's not looking too hot personally. So good. We're at 37 minutes. I'm over time. But it's good to hang out with everybody and talk. So if you have questions and you want to be more up to date with me and markets and watch lists and joining a community of traders that are trying to become better, you got to join the club. It's fantastic. It is completely worth it. I put a lot of time and energy into the club and updating people and trying to provide value there. Okay, great. So until the next time, you know what to do. Stay awesome and stay in the green.